U.S. officials enforced emergency measures to avoid a potential banking crisis. Regulators closed a New York-based Signature Bank to prevent a bigger problem. Now, this comes after the Silicon Valley Bank collapsed last week, the second biggest in U.S. history. President Biden and other lawmakers reassured depositors that they are protected and the banking system is safe. However, Republicans are blaming this on how the Biden administration borrows and spends money.
Biden administration, they need to take ownership in what this economy is doing. They're the ones that have been printing money. They're the ones that have got a budget that keeps borrowing.
Lawmakers are planning to hold hearings in the days and weeks ahead. Well, while the feds moved to protect everyone with money in Silicon Valley Bank, questions remain if problems will persist and become a more even widespread issue. DC News Now's consumer reporter Ben Dennis questions some financial experts about protecting your money given all of these uncertainties. Hey, Ben.
Hey there, Mark. Good evening. Financial analysts that I spoke with said that most American consumers don't have to be extremely worried about this. That's because of existing federal insurance protecting up to $250,000 in deposits. But meantime, there are tools for people to feel that extra sense of security given all of these questions surrounding what happened over the weekend. And analysts say there was not widespread panic about large deposits at multiple banks because the feds had expanded insurance coverage for Silicon Valley Bank, insuring deposits more than $250,000. So what does this all mean for the everyday consumer? Take a listen.
If you have $10,000 in your checking or savings account, you are well under the balance of $250,000. Banks are already paying fees within the FDIC insurance pot to ensure that you are fully covered. So you're just not in that place of concern. The biggest concerns are for folks who are managing the cash flow of hundreds of thousands of dollars.
I don't think this is anything that the average consumer should at all be losing sleep over.
And if I'm not losing sleep over it, but I still want to have at least some personal assurance that my money is safe and protected, how can I do that?
You can go right onto the FDIC website. They have an FAQ, which gives you all sorts of information about deposit insurance limits, which kind of accounts are covered.
And that tool you just heard mentioned recommends checking that your bank is covered by the FDIC, and you won't have to pay for insurance for deposits less than $250,000. That's already automatic. And among accounts that are insured, checking and savings accounts. But non-deposit investments that are not insured include stocks, bonds, and cryptocurrency assets. And if a bank fails, the FDIC says that insurance usually comes the next business day at another insured bank or by a check sent to you. All this and more will be online at dcnewsnow.com. In the newsroom, Ben Dennis, back to you.